Hello, my dear friends and my dear students. I am Prof.S.R.Basapur, K.R. Billad College, Mundargi. Now, I would like to discuss on the subject Law and Practice of Banking, which is specified for the 4th semester, Karnataka University, Dharwad. One of the most important unit, that is the 4th unit as prescribed by the Karnataka University, that is Bank Advance for the 4th semester Bcom. Banks, as we all know, they are the financial intermediaries. They collect the savings from the general public in the form of deposits of various types, mainly for the purpose of lending. Lending of funds constitutes main important function which every banker performs, through which he derives the income in the form of the interest. The banks, as we said, they are the financial intermediaries. They are having the different source of fund for employment. The source of funds can be broadly classified into two groups. Mainly, there are mainly two sources of funds. The first one, owned funds. Owned funds includes what? Owned fund consisting of the paid up share capital of the bank, reserve fund and other reserves. Secondly, borrowed funds. Borrowed funds includes deposits from the general public of the different types and the borrowing from the commercial banks and other major financial institutions operating in the money market. All these funds, maybe it is owned funds or borrowed funds, they are employed by the banker in a various way. Let us have a look about the pattern of employment of the bank funds in the money market. Banks employs very systematically its the fund in the various pattern. Number one, in the form of the liquid assets. Liquid assets includes what? Liquid assets include cash in hand. Secondly, cash with the Reserve Bank of India. Thirdly, cash with other banks. Second liquid asset, that is semi-liquid assets. Semi-liquid assets includes money at call and short notice, discounting of the bill of exchange. Then third pattern of the employment of bank funds includes earning assets. Bank employs a very good portion of the funds in earning assets. It is through these earning assets the banks have been able to earn a good amount of the income in the form of the interest. Earning assets, the third pattern of the funds includes investment of funds in various securities and also various assets. Secondly, loans and advances. Let us have a look in brief about what constitutes the liquid assets. Liquid assets, these are the assets which are readily convertible into cash without much loss of value and much loss of time. Such as I said, Liquid assets includes cash in hand, cash with the Reserve Bank of India, cash with other commercial banks. Then semi-liquid assets. Semi-liquid assets are those assets which take some time for the banker to convert them into cash. The banker has to wait for some time to convert the semi-liquid assets into cash. Liquidity is very important. Liquidity refers to is the ability of the banker to produce the cash on demand. It is also called the ready availability of the cash. Such semi-liquid assets includes money at call and short notice, discounting of the bill of exchange, etc. Then the third pattern of employment of bank funds, as I said, earning assets. Earning assets includes investments. Banks invest a significant portion of the funds in stock exchange securities such as shares, stocks, debentures and the bonds, and also includes government securities, maybe central or state government securities. Then second earning assets through which the banks have been able to earn huge amount of the income in the form of interest is the loans and advances. Granting of the loans and advances is the primary function of every commercial banker. Heavy portion of the funds, heavy portion of the bank funds is employed by way of loans and advances, since it is considered as most profitable one to the banker. While employment of the bank funds or while granting of the advances by the banker should be very cautious. He should have to follow the cautious policies. He should have to follow some standard principles while investment of funds or lending of the funds, because the banker is a dealer in debt of his own and of the public. Banker is a custodian of the money belongs to the public. He has to take care of. He has to give utmost importance for the funds of the public. While lending of the funds, the banker must have to follow a cautious policy, or he has to follow very sound principles. If at all the advance given by the banker to the general public is to be considered a good advance, sound advance, he has to follow certain principles. These principles, they have been followed by almost all banks since long time. Central government, Reserve Bank of India, as they have imposed a number of the restrictions on the part of the banker while lending, in order to comply with all these restrictions of the government and Reserve Bank of India, the banker, while granting advance, he must be very cautious and he has to follow some standard principles. Let me explain about what are those standard principles. There are as many as 6 to 7 principles a banker has to follow while granting of the advances. They are: number 1, principle of safety; number 2, principle of liquidity; number 3, principle of profitability; number 4, principle of purpose; number 5, principle of diversification. It is also called the principle of spread. Then 6th principle of bank advance is the principle of security, and 7th, but the last one, is other consideration or the other principles. Let us have a look in brief about all these principles of sound lending, good lending by the banker, one by one. First of all, the principle of safety of the funds. As the banker uses the depositor's funds, public money, for the purpose of lending, the first and the foremost principle of lending by the banker is to ensure the safety of the funds lent out to the general public. The banker has accepted the position as a trustee out of the confidence reposed in him, out of the trust which is being reposed in him. People are coming to the bank and deposit the money into their account. Safety of the funds of the customer must be the utmost goal and also must be the utmost motto of the banker. Then while safety of the funds lent out by the banker, while lending of the funds, the banker must have to give the loan only to those persons who are in a position to repay along with the interest. The repayment of the loan by the borrower that depends upon, however, depending upon capacity of the borrower, willingness of the borrower, etc. Capacity of the borrower that depends upon the success of the borrower in running his business and earning income and repaying the loan. Then willingness of the borrower that indicates character of the borrower. Character is very important. Willingness is very important. Willingness must be there. The banker has to see that whether the person to whom he is going to give the loan has the willingness to repay the loan taken along with the interest. That is to be taken care of. Second principle of liquidity. According to this principle of liquidity, the banker must have to give as far as possible. In order to ensure the principle of liquidity, he has to give the loan for a short period of time. Then that means that he has to give the short-term loan to meet the working capital requirements of the business houses and the corporates. Further, while lending, the banker should have to demand only those securities against the loan which can be easily converted into cash. That is very important. In order to ensure the principle of liquidity, the banker has to accept those securities which can be readily converted into cash very quickly without much loss of value and much loss of time. This is the second principle. Then third principle of profitability. Banks are basically a business institution, commercial institutions. They must have to make the profit. They are the profit making institutions. In order to earn the profit, as the banks are the profit making institutions, the banker must have to employ their funds profitably so as to earn a good amount of income. Earning of the income is a must. Banks are not social organizations. They are the business institutions. They have to make the profit out of the funds, as they have to pay salaries and wages to the employees and meet out the other day-to-day running expenditure and also to pay a decent rate of dividend to the shareholders. Profit is very important. But in a bid to earn the profit, or in their anxiety to earn a profit, banks are not supposed to ignore two important cornerstones of the employment of the funds. They are called as principle of liquidity and principle of profit. Both have to be taken care of. Then another one principle of purpose. While granting of the advance, the purpose is very important. The purpose for which the banker is lending, that determines the success of this lending. While granting of the advance, the banker should not grant an advance for only productive purpose, should not grant an advance for unproductive purpose. What is this productive purpose? In the case of the productive purpose, when the advance is being given to the borrower, some income will be generated. Borrower, by utilizing the funds borrowed from the bank, that he can earn the income that will enable him to repay the loan taken along with the interest. Banker should not give the loan for unproductive purpose. Purpose is very important. Unproductive purpose includes granting of the loan to a borrower for repayment of the ancestral debt or for celebrating the social ceremony and for organizing the pleasure trip to the borrower. They are all unproductive. No income will be generated from such purposes. Purpose is very important. Then another principle of diversification. A prudent banker always, while granting the advance, he has to select the borrowers from the different industries and from the different areas in order to spread the risk. There is a heavy risk in employment of the bank funds. Banker should have to diversify his funds over a good number of the borrowers, large number of the good borrowers. He has to diversify the funds. Banker should not grant an advance to a single borrower. He should have to grant an advance. He should have to lend the funds to the different types of industries and should have to lend the loan to the different types of industries which are situated in the different areas and having the different line of business, because the risk is always present in bank advance. In order to spread the risk, the banks have to select the large number of the good borrowers. He should not grant an advance to a single borrower. So this the principle of the diversification based on the popular maxim, do not keep all the eggs in one basket. This is one principle. Next principle is principle of security. Security is very important. While granting of the advance, the banker should have to grant an advance only against some securities. Without taking collateral security, the banker should not grant an advance. Security serves as a cushion against the risk of the borrower failure to repay the loan. When the advance is being given against some security, by taking some securities, banker will get two rate of action. One is personal rate of action and against another one is against the securities. In the event if the borrower fails to repay the loan, the banker can realize the security in the market and apply the sale proceeds of the security in satisfaction of the loan. Security is very important because it is the money belongs to the public. Security has to be taken, collateral securities. But while selecting the securities against the advance, he has to select those securities which can be easily marketed, which can be easily sold in the market without much loss of value and much loss of time. They must be readily realizable. And their value can be easily ascertained. Such security only should be selected against the advance of money. Then beside these principles, 6 principles, the other principles are also there. Includes consideration about the customers and customers' proposals. Customers means a borrower here. The banker, while selecting the borrower, he must have to look into the 3 C's of the borrower. Those 3 C's of the borrower includes character of the borrower, capacity of the borrower, capital of the borrower. What do we mean by character? Character indicate what? Character denotes integrity of the borrower. Whether the borrower is a man of integrity, respectability, responsibility, honesty, that should be taken care of, that should be observed by the banker. Then second C's of the borrower includes capacity of the borrower. Capacity of the borrower refers to what? Capacity of the borrower indicate ability of the borrower to run his business successfully and repay the advance. The banker should look to whether the borrower has got the capacity to run his business successfully and repay the loan by earning the income. That is to be considered by the banker while granting the loan. Then the third C of the borrower includes capital of the borrower. Capital is very important. Capital means own funds which the borrower can invest in his project while granting advance. The banker should not finance 100% of the project cost. The banker has to see that whether the borrower is in a position to invest his own funds. Suppose if the project cost is 1 crore, the banker has to look at whether the borrower is able to offer at least 25% of the project cost. 100% finance the banker should not pay. Capital of the borrower, that creates some sense of responsibility on the part of the borrower. So all these are the various the principles which a banker should have to follow while granting of the advance to the general public. Thank you one and all. Thanks for listening to my video. Thank you.